Hey everyone, hope they're having a good day. My name's Andy. My channel's Finding Value. Today we're going to rip through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together, generally related to three different topics: wealth building, commodities, and or financial topics. So let's dive in, take a look, and see what people are sharing. If you want to follow me at _finance, and if you want to join our community, finding-value.com, we have a special going on. Special is the coupon code. You can see the discount in the description link below. And we do have a question and answer session that we are doing today, Saturday, at 7 a.m. Mountain Time when these videos are released. And hopefully I'll see you guys there. So I'm going to skip this and do this one at the end. The logic goes: lower oil gets him and Besant a lower 10-year due to the embedded inflation expectation. So let me say that one more time. The logic goes that the lower you get oil, Trump and Besant a lower 10-year yield due to the embedded inflation expectations. However, tariff and other policies are offsetting this relationship. All of this in order to get tax cuts through without the bond market being the constraint. Note that beginning in his first term, this relationship began to move very closely. However, prior to that, it was a bit spotty. So far, it doesn't seem to be working. Thoughts are always welcome, and we have a disconnect between the 10-year yield going up and oil going lower. Now, here's my question. Does that mean they're manipulating oil lower? Or is the 10-year front-running what oil is going to do in the future? That occurred in, you can see, May of 2020 here. We saw oil kind of come down while the 10-year yield started to rip higher. That was also a weird situation where they shut down the economy and they printed a bunch of money. Kind of a weird situation. But there are times in history, if you look, where the 10-year at some of these bottoms start to go up before oil does. And then there's other instances where oil goes up. I'm in the camp that they're trying to hold this down through some way. Through the paper market perhaps. And then the 10-year is not buying. The bond market's not buying them, holding down oil. And they're coming out. They say what they're going to do. We're going to try to lower the 10-year yields, and they're going to try to lower oil prices. Problem is, if they're successful at keeping oil prices low, well, then we'll just eat through our inventories. And if we eat through inventories, people are going to say, well, I'm going to go long oil. And then everybody starts going long oil when inventory levels get low, kind of like myself. So the markets will force oil higher against them if they are trying to play games with it. Rule number one, most things will prove to be cyclical. Rule number two, some of the greatest opportunities for gain or loss comes when other people forget rule number one, that most things are cyclical. Says Howard Marks. Cycle Bottom says, now it's met coal stocks round tripping. Another minus 30% downside can lead to a plus 10x upside. I actually agree with that. I think met coal's been absolutely smoked. The companies and the equities, and I do think there's going to be opportunities here to buy a bunch at a very good price. I'm going to partake in it. That's what I'm going to do. Kevin Bambro says, silver market is looking like it is ready to run to all-time highs. Sprott Physical Silver Trust, PSLV, could clean out COMEX if the shorts are forced to cover and the buying momentum continues. This is the silver squeeze, market manipulation, and the coming storm. The article here. The silver market has always fascinated me, particularly because of its dual role as both precious and industrial metal. What many don't realize is that we're heading into what could be the most significant silver bull market in history, one that could make the 1970s look like it does end at a really good spot. Yes, we can see a large silver squeeze. We've got the pattern, the 50-year cup and handle. We break out, and yes, everyone will be happy that owns silver. I've been waiting for this since. So I followed silver. I followed Mike Maloney in the mid-2000s. Back then, I would listen to things. I listened to Peter Schiff, and Jim Rickards was pretty big back then. So it was basically Peter Schiff, Jim Rickards. There was some other guys that aren't as active anymore, or maybe I should say some of them actually have passed away since then. I used to listen to a lot of peak oil guys like Richard Heinberg, Matthew Simmons. I listened to Chris Martinson. He's more recent, but he was kind of slightly after those guys. And I listen Colin Campbell, the Shell geologist. Listened to a whole bunch of those guys back in the day, and I still think some of those predictions will eventually come true. They're just pushing it outward now that we've got shale oil and stuff like that. But coming down, we got Grady here. Been saying for months, gold 3,300, silver 40-45 bucks is next. And today, gold gapped above the magic $3,000 per ounce. So that, yeah, we could easily be seeing this. High Heat says, we're painfully laying the foundation for the greatest oil rally in history. I actually believe that. In fact, it's not about the belief. It's about the data. Okay, well, why could we have the greatest oil rally in history? Well, inventories are low, and the fair value of oil is supposed to be mid to upper 80s right now. That's the fair value given where inventory levels are at. We've got strong demand. OPEC, they're bringing back oils. Now, some people view that as bearish. OPEC doesn't bring oils back if it's bearish. They only bring it back when it's bullish. We're going to eat through, I would say, about 1.5 million spare capacity probably this year. We eat through that. What's next? Nothing. We've got maybe a little bit left to grow in Canada. We have a little bit left to grow offshore, but no one on offshore is drilling right now. Go listen to their conference calls. They think that there's a slowdown in 2025. Well, it's not they think, they are. They are experiencing a slowdown in 2025, and hence the reason why they've pulled back. We are literally laying the foundation in 2025 for the greatest oil rally in history that is coming. And you can even look at some of the charts like, and I showed this yesterday, US oil divided by SPX, and then you back out and take the line. This thing is ready to go. This is the greatest bull market in history that no one is paying attention to. Could we go sideways for a year? We could. This could take a little bit of time to play out, but it's laying the foundation for the greatest oil rally in history right now. And no one knows what the heck is going on. Everybody, all they care about is short-term earnings per share releases. It's so stupid. It's so dumb. Your entire world as an investor will change when your time frame moves outward, when it becomes longer. And then you look at everything in the short term as opportunities. As everyone looks left, you're looking right like, I can't believe people think like this in the short term. But that's what's being laid down, the foundation for the greatest bull market in oil probably ever. No one cared about subprime mortgages till something broke. Dr. Burry was dunked on for 2 years before dropping a 400% plus year return. It feels like a similar pattern is going to happen with oil. History doesn't repeat itself, but it sure does rhyme. Yeah, it does. And that's exactly what we're doing. We're laying the foundation for the greatest bull market in the history of oil. It says no one is going to care about oil fundamentals until something breaks. There it is. No one cares until the price starts moving, and then we get a bunch of FOMO guys. Fear of missing out. I got to jump in. This is going up. It broke a downtrend. It broke a horizontal line. Blah, blah, blah. But the fundamentals were there the entire time. So you could literally buy the bottom of all these different companies if you're paying attention to everything. The fundamentals, the technicals. You could be very aggressive because the valuations of companies give you this large margin of safety. So that's when you become aggressive. You become aggressive when everyone else doesn't like it. And that's the only way you can make a boatload of money that I've found. It's not trading, making 30, 40% moves. It's buying things that are fundamentally undervalued, like massively, where they could do a 4 or 5x just to get to fair value. But if you're in a gigantic bull market where oil starts to rip, well, that turns into a 20 bagger or a 50 bagger. That's how you do it. Investment wisdom: he who lives by the crystal ball will eat shattered glass. Ray Dalio. I wonder how many people actually understand that. Crystal ball means that you're making predictions. Those who live by predictions will eat their predictions because they will be wrong a lot. Eric Nuttall says Scott Sheffield said the best oil in the shale patch is drained. Were not for U.S. shale, the world would have been in an oil supply crisis, and that's where we're going, an oil supply crisis, laying the foundation for the greatest bull market in the history of the world for oil. U.S. shale has entered its twilight phase, lower growth going forward after having grown at its slowest pace. Drill baby drill is toothless. Geology, capital discipline, Trump's White House policy. There's a number of factors that will lead to tighter oil markets in 2025. It's all coming. Charlie Munger on dealing with stock market declines. If you can't stomach 50% declines in your investment, you will get the mediocre returns you deserve. That's it. If you can't stomach large volatility, then you will get underperformance, because what you're going to do is you're going to seek a bunch of things that can't move up. Silver chartist. Okay, that's that one we went through last time. I'm going to go back up to the top here. So I was reading this, and it's not finance necessarily related, but it is health related, and it caught my attention. 70% of white people reported that they used sunscreen at the beach in 2022. 10% of white people reported that they used sunscreen at the beach in 1975. In 1975, there were approximately 30 skin cancer cases per 100,000 people. In 2022, there were approximately 1,691 skin cancer cases per 100,000 people. That's more than a 400% increase in skin cancer cases. Does anyone else find this odd? Well, I will say this. I don't think the root cause is sunscreen. So what I did is I went to Grok AI. What I put in there, I said, does a poor diet increase the chances for skin cancer? And I know the answer, but this is what it said. A poor diet doesn't directly cause skin cancer, but it can play a supporting role in increasing your risk. Skin cancer, mainly types of melanoma and those few others, is primarily driven by UV radiation exposure from the sun or tanning beds, along with genetic factors. That said, what you eat can influence your body's ability to protect and repair itself, which ties into cancer risk indirectly. Diets low in antioxidants like vitamin A, C, and E, and minerals such as selenium and zinc might weaken your skin's defense against UV damage. These nutrients help neutralize free radicals, which are unstable molecules generated by UV exposure that can harm skin cells and lead to mutations. For example, studies suggest that a diet rich in fruits and vegetables, think carotenoids from carrots or vitamin C from citrus, can bolster skin resilience. On the flip side, a junk food heavy diet loaded with processed carbs, sugars, and unhealthy fats can promote inflammation and oxidative stress, potentially making your skin more vulnerable over time. There's also some evidence linking specific dietary patterns to skin cancer risk. High consumption of omega-6 fatty acids found in many processed oils versus omega-3s in fatty fish might tilt the balance towards inflammation, which could amplify UV-related damage. A few studies, mostly observational, have hinted that diets high in dairy, particularly milk, might correlate with increased risks of certain cancers, including skin cancer, possibly due to hormones or growth factors like IGF-1. But this isn't definitive for skin cancer specifically. It's more established for cancers like prostate. Alcohol is another angle. Heavy drinking can impair your immune system and increase oxidative stress, which might compound UV damage. It's not a poor diet in the classic sense, but it's a dietary choice that can nudge the odds up. The flip side, no diet can fully shield you from skin cancer if you're baking in the sun unprotected. A 2020 review in Nutrients found that while antioxidants and anti-inflammatory foods like green tea, polyphenols, or curcumin show promise in lab studies for reducing UV-induced skin damage, human trials are inconsistent. So diet's a factor, but it's not the star player. UV exposure still steals the show. In short, yes, a poor diet can increase your chances of skin cancer indirectly by weakening your body's repair mechanisms and ramping up inflammation. But it's a secondary risk factor. Slather on sunscreen and skip the tanning bed before you start obsessing over kale. Want me to dig deeper in any studies? So here's what I would say. I think that the main contributing factor between then and now is actually diet and what people are feeding into their bodies. So although it says it's a secondary thing, with the numbers here of not necessarily sunscreen, but just the sheer numbers of cancer, 30 between 30 versus 1,700 per 100,000 people, that's a huge move higher. There's got to be something that is different. And the only thing that I can think of that is different is two things that you could maybe think of. The Earth's ozone, there's a higher amount of UV getting through, maybe, or another major factor is diet. And we know that people are getting heavier with time. They're eating more oils and they're eating more, we'll call it unhealthy choices, more genetically modified things or things that you can't find in nature. And I think that's a major contributor to it. But I wanted to throw that in there. There wasn't a ton of financial stuff that I thought was that interesting this time. But that's what I threw in there at the end. Hopefully it helps you guys think about certain things. But give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. And that's all I've got for today. So we'll catch you next time. This is Finding Value.